June 18, 618, the golden ratio, the golden number. So we're going to talk about this week and what's going to be happening going forward. And I want to emphasize that this week is probably significant for a number of reasons. The market's probably going to bottom by the 27th or 28th of June. The third wave of the decline, if it is a five-wave decline, would be completing from the January 4th high in the S&P. And there's a chance, if the 1962 market is repeating, which seems to be a pretty good candidate since it's done almost exactly the same thing as it did 60 years ago to the day, that was a very significant low point. So for those of you who like taking risk, I'm not one of them, but if you happen to enjoy the idea of taking risk, there is a small chance that the low that's coming in June of 2022 will hold for a long, long, long time. In 1962, it was the low. It was retested in October, November of 62. And then we went up in 1963, 64, 65. So this was a low for 3.5 years until 1966. I'd say the probabilities of such an event are about 5%. I don't think it's real. But it is something I wanted to bring out for those people who like the idea of buying the bottom and holding forever. Okay? More likely, much more likely, is that we will see additional decline later this year, which is significant. Even in 1962, after a summer rally, we had a big break that didn't quite make it down to the June low, but it did make a very big effort to come close, and winds up in October. The 20.16-year cycle, which we've talked about before, which had a low in 1942 in April, and June of 1962, and August of 1982, and October of 2002, would come in December 10th of 2022. That would imply that there could be additional weakness past October until December. Since that hasn't failed in 100 years, I wouldn't bet against the fact that there's a chance, I would say a 50% chance, that the market will stay down until close to the end of the year. Okay. Having said that, what's likely to happen in the short term, which is why most people are watching these weekly videos, is that the market will bottom either the 24th or 27th of June. We were expecting 3,600 as a target, got very close, got back up close to 3,700 on Friday, and we are expecting that this coming week it will make new lows beyond the 3640 level that it reached, possibly going as low as 3520, which would be about a 28% decline. The one in 1962 was 29%, would be the equivalent of 3,400 in our present market. So that's where we're headed, and most ways you look at it, whether you look at the 22-year cycle of 2000, it had a low on the 29th of June. You look at the 1966 market, had a low late June, a rally to mid-July, and we will see a good chance of a rally at least till July 18th. Some of the other patterns go down after July 20th until mid-August, and then rally again until Labor Day. Around the 2nd to the 6th of September would be a secondary high after the July 18th high. And then they first have a nice break in September, October. But the probabilities, as far as I can tell, are that we're going to see a high around July 18th and possibly a very severe decline from July 18th down into October. So for those people who are risk-averse, but there's still a high probability of some rally, you might consider the idea of buying and holding until July 18th, and then watch the market closely after that. If it begins to show any signs of topping, then you might consider getting out of it. All right, so that's where we're going to manage it. By the way, if you find these videos interesting and useful and helpful, please let us know by putting a thumbs up on your computer or your phone, and because it helps us. It's a way of, we know that you want these things to continue, and we also help us get support from the YouTube algorithm, and it seems to actually work last week. It was pretty impressive how many more people signed on simply because we had YouTube helping us market this. It was fascinating. In any event, the probabilities are right now we're going to have a low in late June. It could be a major low, but at least the probabilities are that it will be a minor low that could go until July 18th in a fairly strong capacity. If the low is around 3,500, it could revisit the 4,200 area again. And if it is stronger than that, don't get fooled. It doesn't mean the world is turned bullish. It's not likely. But in the 1990 and the 1998 markets, both of which are in sync, they're in the 8-year rhythm. If you go back 8, 16, 24, 32, etc., those are in there. And 1966 is also a multiple of 8 years ago. The 1990 and 1998 markets had new highs, actually, in July. They took off and they just flew up. But they weren't as bad the first few months of the year as our market, so it isn't a high probability that will happen. But if it does, there's even more of a chance that between July and October the market will actually fall apart, because both of those markets had about a 20 to 22% break from the July 20th high to the October low. Okay, and the lows would come in October 4th or 7th if those do repeat. I was also going to say that the 120-year cycle is a very good candidate for what is going to go forward in the long term, and it also matches what happened in our most recent 2000 to 2003 bear market, which indicated that next year, 2023 and 2024, would both be down years, and the prices would go yet lower, which would imply a 3 or 4 year downtrend or bear market. I believe that is more likely than any of the other chances, but since we're at a very pivotal point, I wanted to let you know, for those who like to take risk, you might get lucky, and buying here might be valuable. All right. Thanks a lot. We'll see you next time.